Happy Monday, everybody. The S&P just logged its best week since November. The Nasdaq strung together what is now nine straight wins, and investor optimism is suddenly back in style. But will this week's Fed meeting, inflation data, and Fed speeches, not to mention earnings, will that put the rally to the test? So let's break it all down. Let's do it day by day. Today is May 5th, 2025, and of course, this is your Monday market update. Last week opened Monday with modest moves. The session was largely driven by caution headed into some high stakes weeks of earnings and economic data. Geopolitical pressure also resurfaced after reports that Huawei, the Chinese company, was developing an AI chip to rival Nvidia's technology. That did weigh heavily on semiconductors, with Nvidia dropping over 2%. Still, a late day statement from the White House pointed to progress in the UK trade negotiations, helped to trim the losses, and highlighted that global trade remains a central driver of sentiment. The Dow was down 1/3 of 1%, S&P was up just a touch, and the Nasdaq was down 1/10 of 1%. Despite some underwhelming tech earnings and a weaker than expected consumer confidence readings, stocks extended their winning streak on Tuesday. Investors brushed off negative headlines as the market found relief in China's decision to ease tariffs on U.S. ethane gas. All right, it's in the natural gas family. So here you go. Rare positive signal in the broader trade landscapes. Markets were also cheered by signs that the Fed might not need to tighten further despite lingering inflation concerns. The ability to rally in the face of weak data was a reminder that investor positioning had turned more constructive after April's sell-off. The Dow was up 0.75 of 1%, S&P up 2/3 of 1%, and the Nasdaq was up 2/3 of 1%. Market faced a double dose of economic warnings on Wednesday. First, ADP employment data came in lighter than forecast, suggesting slowing job creation. Then GDP for Q1 showed a contraction of about -1/3 of 1%, the first negative print since 2023, primarily due to large trade imbalance. Of course, we're seeing that. Stocks opened lower but reversed by the close after the core CPI inflation index, that's the favorite Fed metric, did come in slightly below expectations. On top of that, headlines emerged that the U.S. had reinitiated trade talks with China. Again, not confirmed by the other side again, but that was enough to turn the tide, and all three major indices ended the day up. The message: markets seem to be willing to buy the dips, at least for now. The Dow was up 1/3 of 1%, S&P up 1/10 of 1%, and the Nasdaq was down 1/10 of 1%. Thursday, tech took the spotlight with blockbuster earnings from Microsoft and Meta. Microsoft jumped more than 7% on strong cloud revenue, and Meta rose 4% thanks to growing adoption of its AI ad tools. This enthusiasm helped drive a broad-based rally. Under the surface, productivity and labor costs data did show rising wage pressures up about 5.25% for Q1, but that didn't spook investors. With 80% of the S&P companies beating earnings expectations so far, the narrative has shifted decisively towards optimism, at least in the short term. The Dow was up 1/4 of 1%, S&P up 2/3 of 1%, and the Nasdaq was up 1.5%. It was a fireworks finish for the week. April's job report showed 177,000 jobs added. That beat the consensus of 130,000, and unemployment held steady at 4.25%, or 4.2% to be exact. The data was strong enough to reassure investors that the labor market remains healthy, but not so strong that it revived fears of more Fed hikes. The Friday capped a 9-day winning streak, as I mentioned, for the Nasdaq, the longest since 2004. Even mixed results from Apple and Amazon couldn't dampen the mood. After a rocky April, the bulls seem to be back for now. The Dow, S&P, and the Nasdaq each up about 1.5% for the day. For the week, the best week so far this year, the Dow was up 3%, S&P up almost 3%, and the Nasdaq was up 3.5%. The week was powered by strong earnings, cooling inflation, and a hopeful tone around trade. Investors did shift from defensive to offensive, with money flows going back into growth and tech. This week could be a turning point, so here's what we're watching. We'll have eco data, trade data, jobs, and what everyone will watch, though I still remain underwhelmed by their hold on this market in the short term. The Fed meeting will be Tuesday and Wednesday, the release on Wednesday, with the press conference also on Wednesday. We are still in the heart of earnings season. Nearly 20% of the S&P 500 will report this week. Since Friday will open the door for Fed heads after the blackout of the meeting, Fed head bingo is back in full swing with a full day of Fed speeches, including Williams, Barr, Kugler, Goolsbee, Waller, Hammack, Cook, and Musalem. Their tone will shape expectations for the rest of the quarter from the Fed side. Last week gave investors a much-needed breather and a dose of optimism, but don't mistake short-term momentum for long-term clarity. The path forward still depends on inflation, policy, global stability. What I'll be watching for, and I'll keep you in the loop, tariff news, and this is still the big one. Softening growth, earnings last week, and the GDP print too. I'd like to see and hear good things from earnings this week, but not just in the numbers, but also in the guidance. And yes, we'll need to listen to the Fed. I still remain that they make some of the most noise, but are not carrying the biggest stick in the room right now. As always, I'm here to help you sort through the noise, stay focused on your long term goal. As you know, that is what I believe the most important part is. Have a great week.